Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 29th, 2025. I am Luna.
I am JPMorgan.
We've seen these record highs, but also this quiet tension building under the surface. Our mission here is to explore what you really need to know.
Exactly. And for you, we're basically pulling out the most important bits from the last 24 hours. Market moves, macro shifts. The idea is so you understand not just what happened, but crucially why it matters for, your financial landscape and what's maybe coming next.
Okay, so let's start with the U.S. markets, the last 24 hours. What jumped out in your sources? I saw the Nasdaq composite hit a fresh all-time high.
That's right. Climbed about 0.33%, so around 21,178.58. But interestingly, the S&P 500 was pretty much flat. Still at a record, 6,389.77, but flat.
And the Dow?
The Dow actually dipped slightly, down 0.14% to 44,837.56.
So not exactly a broad rally then. Feels like something else is going on underneath.
Yeah, that's a great point. It's definitely not uniform. What's really interesting, if you dig in, is that energy and defense stocks, they were the real outperformers.
Okay. Why them specifically?
Well, it looks like it came right after this new U.S.-EU trade deal got announced. That deal had a 15% tariff on most European imports. But it was balanced by Europe committing to buy more American energy and military gear, so those sectors got a boost.
Right. But the wider market didn't really react strongly.
Pretty muted, yeah. Almost like that phrase, bought the rumor, sold the news. Like maybe investors had already priced in the deal happening. It really points to a kind of cautious tone overall, especially the Fed meeting starting.
That makes sense. So looking beyond stocks, what else should we be watching? What about gold, crypto, oil, bonds? Anything stand out in your sources there?
Sure. Gold prices stayed pretty firm, holding around $3,320 an ounce. That still signals that safe haven demand is there, people looking for stability.
And Bitcoin?
Bitcoin pulled back a bit, down about 0.6% to roughly $118,800. Again, reflects that same caution ahead of the big macro stuff.
Okay. Oil?
US WTI crude. It eased slightly, too, down to $66.41 a barrel. Seems influenced by chatter about OPEC, plus maybe increasing output down the line.
And bonds. I heard yields were up.
Yep. The U.S. 10-year Treasury yield climbed. Got up to 4.42%. That's up 0.03 percentage points.
Yeah.
And it's directly tied to new supply hitting the market.
Right. And that new supply, it's not small, is it? What's driving that huge bond issuance? What's the bigger picture impact we should be thinking about from your sources?
Oh, absolutely not small. The U.S. Treasury's borrowing plans were a huge headline. They're looking to borrow, get this, $1.007 trillion just in Q3.
Wow. $1 trillion in 1 quarter.
Yeah. It's a $453 billion jump from what they forecast back in April. I mean, just for context, that's almost half of what the entire U.S. government borrowed in all of 2019.
That's staggering. And that directly feeds into rising bond yields, right? The cost of money going up.
Exactly. More supply means yields tend to rise. Another key thing you flagged was the U.S.-China talks restarting. High-level meetings in Stockholm. Treasury Secretary Bessent meeting Vice Premier He Leifing. They're apparently trying to extend the current tariff truce by another 90 days.
Which is pretty important given that August 12th deadline looming avoids an immediate trade flare-up.
Precisely. Crucial for market stability right now.
Okay, shifting gears then. The big event this week you mentioned, the Federal Reserve meeting, it kicks off today. Everyone expects rates to stay put, right? 4.25% to 4.50%.
Yeah, markets are pretty much pricing in no change. Widely expected.
So if the rate decision itself isn't really the news, what is the one thing you'll be listening for from Chair Powell? What could actually move markets?
It's all about this statement and Powell's tone in the press conference afterwards. Any hint, any clue about their future thinking on policy? Are they leaning more worried about inflation or maybe more concerned about growth? Even subtle shifts in language can really ripple through the markets. Hawkish, dovish. That's the focus.
Got it. And beyond the Fed on Wednesday, the week's packed. What else are you tracking from your sources?
Oh, yeah, it's busy. After the Fed, Friday brings the big U.S. jobs report, non-farm payrolls. Always huge for Fed expectations. We also get U.S. GDP for Q2 and the PCE price index later this week. That's the Fed's preferred inflation gauge, remember.
Plus, earnings season is peaking.
Peak earnings, yeah. Over 150 S&P 500 companies reporting. So tons of direct insight into how companies are actually doing, the health of the economy at the ground level.
So overall, the mood seems cautiously optimistic. Is that fair?
I think that captures it well. Cautiously optimistic. You've got equities near records. Inflation seems to be cooling. Trade tensions are easing for now. The Fed's being patient. But caution is definitely warranted. Got to stay vigilant.
Vigilance is key, absolutely, because even though the trend looks okay, this week could easily shift the mood. Like you said, the Fed's tone on Wednesday is huge, even without a rate change. Then there's the risk of surprises in the economic data payrolls or GDP could throw a wrench in things.
Exactly. And that could change rate expectations and hit different sectors differently.
Plus, we still have that U.S.-China tariff deadline hanging out there, August 12th. And this surge in Treasury borrowing that could keep pushing up the cost of money, right? Potentially pressuring those high-growth stocks.
That's definitely a risk to watch, the bond market dynamics and what it means for liquidity and borrowing costs. So given all this, our advice really is just stay balanced. Make sure your portfolio risk lines up with, your own comfort level. And try to keep that long-term perspective, even if we see some short-term bumps this week.
Right. Good advice. So, boiling it down for you, the listener, as interest rates look set to keep climbing, maybe gradually, what does this rising cost of money really mean? What implications could that have for the broader economy and maybe for your investments in months ahead? Something to think about. Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.